Today I have 8 trading tips that will help you deal with your emotions and manage your trading psychology much more effective. So welcome back to the Traders Improve podcast. Yes, finally I'm back to regular episodes. And make sure to go to Tracademy.com/podcast. First of all, you will find all the previous episodes there. And also I added a form there where you can submit your own questions for one of the next podcast episodes. So if you want to hear your question answered and if you have a specific question, make sure to head there and submit your question. So let's get started with the 8 tips that I have prepared for you. First of all, I think it is very helpful, especially in the beginning, if you have a daily or a weekly loss limit. What this means is that it will protect you from a downward spiral, from blowing up your account or losing too much money in a very short time period, especially in the beginning. I know from experience that revenge trading, trying to make it back, is very common, and just removing yourself from the computer and not or eliminating the opportunities for yourself to just jump back into the market can make a big difference. It will make a difference because let's say you lose 1 or 2 trades, you feel itchy, you want to get back into the market, you don't have a trade but you want to take a big one, and then you walk away, then you come back the next day and you see, okay, wow, I would have lost so much more money, and this would have put you in a very bad position. But if you see with time that the world is not ending if you can't make your money back, and actually it will put you in a better position, you will be able to adopt this mindset, and slowly but surely you will move away from this revenge trading mindset where you always think you have to make it back. So establish for yourself a daily or a weekly loss limit. How much trades or how much money can you lose in a certain period of time before you just stop trading for the week. Another thing in this context is what I often see can help traders is that if you hit a certain loss limit, you reduce your position size. That can also have a big impact. Of course, then it sucks when you suddenly then make a winning trade. But on the other hand, in my opinion, it's always more important, especially in the beginning when you're not as stable with your emotions, to protect your downside. You can always make more money, but if you hit a losing streak, or if you hit a very big loss where you blow up your account, this will be very hard to recover from emotionally. And I've seen many traders give up after they have blown their second or third account or just had a major loss. So emotional capital, in my opinion, is very important for the long-term game. So this brings us to the next point. Don't use weekly targets, performance targets, that is. So many traders say, okay, I want to make 5% a week or 10% a month. And this has 2 negative effects. First of all, you will probably end up over trading because, well, if you are very close to your weekly performance goal, but you haven't made it, and what will happen? Of course, you will start looking for trades where there are none, and then you will take trades that you know you shouldn't be in, and you will take bad trades, and more often than not, you will give back money, and it will put you further away from the target. At the same time, sometimes there will be just those amazing days or weeks or months where the system performs very well, and then you should not limit yourself to a weekly target. If you make 5% a month or 10% a month, and that's your target, and then you stop trading, but there are more setups coming your way and you miss them, this is very bad for your overall long-term gain, because there will be times when the market just doesn't agree with your system and with yourself. And you need to make sure that during the good times you make as much money as possible so that you are prepared for the not so good times. Number 3 is manage your expectations. I could talk about expectations for days and weeks because it's one of the most important things, I think, in trading. Our expectations shape how we act as traders and how we view ourselves and how we talk to ourselves, and it has a very big impact on our psychology in general. If you believe that You can be a millionaire starting with a $1,000 account in 1 or 2 years. If those are your expectations, you will approach trading from a very, very bad place, obviously, because, well, you will take too much risk. You will just have a very, very bad risk management approach, probably none at all. You will just take big trades and try to swing for the fences. And then at the same time, once you realize that this is not how trading works, once you realize that your expectations cannot be met, you will get frustrated. And then this will pull you down even further. So managing expectations is very, very important. And you need to double check your expectations and really ask yourself, take your time, what is it that I'm expecting? And I've talked about it in a previous episode. What is profitable trading? What are your expectations when you think about profitable? Does profitable for you mean 1% a month, 2% a month, 100% a month? And those are very, very important questions to answer. When we talk to outside capital, for example, and if you tell people you can make 20% a year, which is less than 2% a month, people will start throwing millions and millions at you. And this is a very, very big thing that you need to realize. Of course, this is then requiring you to play the long-term game, where you're not only trading your own money, but let's say you have the plan to, in 5 years, have a great track record, 20% a year, 15% a year, small drawdowns, and then you approach money, outside money. People will throw it at you. And at the same time, how, in quotes, how easy is it to be a profitable trader when all you're trying to do is make 1.5% a month? How easy will it be? You don't need a lot of trades. You don't need big trades. You don't need to trade all the time. You can be very, very selective. And I think once you start to realize that this is a very important, very valid option, probably even a much, much better option than trading your own money, this can change your whole outlook on trading. Number 4, objectively analyze losses. When I look at my trades, I always ask myself, what caused the result? Was it me? Especially when I look at losses, by the way. Was it me that caused the loss? Which means then I broke my rules, I did something wrong, I took a trade that I shouldn't have taken, or did I do everything correctly and the trade just didn't work out? And the answer to that will help me understand, first of all, what is, how am I performing? And second, it will also help me understand the reason or the foundation of that trade. And if I realize that out of the last 10 trades, 6 losses were caused by my mistakes, then of course this isn't a nice realization, but this is very important to realize because it means that you are the weakest link and you can pull it. If you pull it together, you can completely transform your trading. If you realize that, okay, I know this trade, I should have waited a little bit longer, then it would have worked out better, or just something you could have done in your approach differently. And if you see it objectively in front of you, it will often be a very, very big eye-opener once you realize that, okay, I'm not that far away actually from trading profitable or making better trading decisions. And objectively looking at your trades can be a very, very big, big step forwards. Work ethic, point 5. Double check your work ethic. How do you approach trading? Is it just a hobby where you invest maybe 20 minutes a day, maybe in the evening you just scroll through your time frames, hunt for some setups, and then take some random trades? Or are you really serious about trading? Do you trade? Do you make trading plans? Do you update your charts regularly? Do you have a trading journal? Do you actually fill out your trading journal? Do you review your trades? Do you journal mentally as well? Do you backtest your trading ideas, and so on and so forth? And having a good work ethic, not only in trading but everywhere, it's just going to make such a big difference, obviously. And yeah, you can ask it. I'm pretty sure you can tell it within a few moments. Just look at it objectively once again and ask yourself, okay, can I be a little bit more serious? Where should I improve a little bit more? And it doesn't take a lot of time, 1 hour a day, 2 hours a day, a few hours on the weekends. That's usually all it takes to really turn it around. If the work you're putting is targeted at the right things, it's just aiming at the right areas. And don't waste your time looking through forums, reading some things that are not really helping you move forward. Feed your brain with good things, like this podcast or my blog or whatever. But make sure that you're really approaching trading with the mindset and the seriousness that it deserves. Recognize progress. This is especially important when you hit a roadblock or when you're trading around break even for a while. Many traders give up too soon because they don't understand and they don't appreciate how far they have come already. Just think about 2, 3, 4, 5, 6 months ago. Where were you in your trading? And compare to what you have learned. And for that, it helps to have a journal, Edgewonk, or whatever, where you keep just notes and your observations and your thoughts. Just understand that, okay, I have really come a long way since the last 6 months, and this should give you hope. And then the next step, obviously, is make sure that you set yourself up for the next 6 months. What are the steps that you can do, that you should do, to make sure that in the next 6 months, when you look back, then you can again recognize progress. And what this does is it also keeps you from system hopping. Because what happens is that many traders, although they make progress, their trading becomes maybe a little bit better only, but it becomes better, which is the only thing that matters over time. And then they think, again, because maybe they have wrong expectations, they're not moving fast enough, or they should already be profitable and have millions and a Ferrari and a yacht and a private jet. But in fact, they have already made so much progress, and if they just keep compounding it, they will have those things in 5 or 10 years. But if you don't recognize progress, what you will do is maybe you throw away a good trading system where you have already learned quite a bit, and then you start from scratch again, you try to learn something, and then the same cycle repeats itself over and over again. The last point, fear comes from uncertainty. Many traders obviously often experience fear. Fear of missing out, fear of missing a trade, fear of giving back, fear of entering the markets. And fear often comes from uncertainty. And uncertainty can be removed often. And especially when you've done my trading psychology course, there are 2 or 3 lessons where we just talk about fear. And I have assignments on how to overcome fear. And for me personally, what I've seen is that once we remove uncertainty, many things become not as fearful or as frightening anymore. So what you can do right now is, again, start a trading journal and really understand what you're doing. Once you understand what you're doing, you can be more confident, and then you will understand actually your trading system and yourself as a trader much, much better. What you can also do is start making trading plans. I just uploaded a new video on YouTube where I show exactly how to make a trading plan for a Forex chart step by step. And once you adopt such an approach where you know exactly what to do, when to do it, how to find your trades, how to map out ideas, how to trade actually, how to manage your trade once you're in it, then obviously you can remove uncertainty, and then you know exactly what to do, and then trading doesn't become, or then trading isn't as frightening anymore, and you won't be feared. And then with time, with experience, you will be able to remove more and more uncertainty and become less and less frightened. And those are my tips. I think it's only 7, but I think it's more than enough to help you make a big step forward wherever you are in your trading journey. So I hope you enjoyed this episode. Please make sure to go to Tradeciety.com/podcast. Submit your question. Also, you can check what I've talked about previously in all the session podcast archives. And then I hope to hear from you, and you will certainly hear from me in the next episode.